Could you be one of those people out here who think just because you have a small income or an average income that you can't build wealth? Well, I'm here today to burst your bubble because I've seen people who are capable of building wealth from scratch with a minimum wage or while having an average income. I'll break down how you can do that. Just stay with me. Hi, I'm Miss Muithathi and welcome to my channel. I talk about personal finance, building wealth, money, life, without pretending that everything is just easy, because it's not. If this is your first time here, please don't forget to like, subscribe, comment, share, and turn on notifications bell so that you're notified every time I upload another new video. Now, how do you build wealth when you have an average income or a small income? I'll break down 4 ways on how you can get to do that. Okay. Number 1, of course, is about your mindset. You have to adopt a strategic financial mindset. For example, you have to shift from saving to investing. And this is because, I'll be honest with you, saving alone, when you're saving money alone, you'll never build wealth. Okay. And this is because when you save money, this is where it's affected by things like inflation. So for you to be able to prevent your money from that, you must invest. That's the only way you will be able to outpace inflation. Another thing that you must learn to do is to build consistent habits. My dear, you see, building wealth, it comes from small, consistent actions that you keep taking over time. Wealth isn't built from grand leaps, unless, of course, you were born with a silver spoon in your mouth, of which, again, I'm not talking about you. I'm talking about people who have average income. So small, consistent steps. And this is important because you see that habit of course, you've gone from saving, you start investing. If you start investing, those small habits that you start building of investing, kidogo kidogo, they matter a lot more than the amount you're investing. So do that, then track your spending. Don't live your life like a peacock, burying your head in the sand, and you don't want to know what is happening. You don't want to check your account balance. You don't want to know how money is coming in, how money is moving out. No, you have to take control of your finances. You have to take control of how you spend your money. And this is because you can't manage what you're not measuring. You won't know what is happening, and these are your finances. Take control. This means track every shilling, not just notes. Those coins that you see laying around, track every shilling. Because this is the only way you'll be able to identify and eliminate money leaks. If you don't track those coins, you won't know. And for you to know a coin is important, in 1,000 shilling note, if you remove 1 shilling, it is no longer 1,000 bob. So you see how important that 1 shilling is. It's what makes that 999 into 1,000 Kenya shillings. Okay. The second thing that you need to do is to establish a strong financial foundation for yourself. What do I mean by this? Is you need to create a budget, something like the 50-30-20 rule. You can use it as a guide, okay? Like 50% goes to needs, 30% goes to wants, and of course 20% goes to, we said not savings, to investments. Another thing you need to factor in is you need to start or have an emergency plan. You need to have built that already. If not, start by saving at least 3 to 6 months worth of your expenses. You need to figure out, by now you need to know how much you spend in a month in your household. Okay? Then multiply that by 6, at least 3 to 6. Okay? Then put that money in a safe or in a something like, nowadays people put their emergency funds in like a money market fund, because in a money market fund, that's one of the, you'll find funds that you are able to access your funds, but at least it's not being eaten by inflation. It has like a 10% interest in case you don't touch that money for like a year. Okay. This way, when you have like an emergency fund, it helps you, like it avoids you from falling into things like debt when unexpected costs arise. And you know, this is life. Those unexpected costs will come up. Okay. So an emergency fund is a buffer for you. Okay. It's like a soft landing for you. That's something you run to in case something happens. Another way you can form a strong financial foundation is like by joining a SACCO. Okay. Although the other day now we had, if you have money in the SACCO, the government is coming for it. But still, a SACCO is one of the entities that provide you like a structured way to save your money. Okay. And nowadays, there's SACCOs who even sell land, they build houses and stuff like that. They have also the funds, like you can invest with the SACCOs, and there's dividends at the end of the year. There's a certain percentage interest. You just have to be smart about it, okay? So that your money doesn't just sit there. You put your money in a SACCO, but it also still works for you. So I say you have to be smart about these things. It's not just about placing your money in a SACCO and that's it. You can earn dividends through such. And the beauty about SACCOs, everyone knows, is you get affordable loans for things like development at rates that are unmatched by banks. Okay? So that's a plus. So the third thing that you need to do is to choose the right investment avenues, because not all investment avenues are right for you. It depends who you are, where you're coming from, and your circumstances. That's another thing people take for granted. That you think because this is a certain investment avenue, that you think it works for you. No. One thing can't apply for everyone unless it's oxygen. And this is not what we are talking about, right? For example, money market funds, like I mentioned. These are ideal for short-term goals and emergency funds. And this is because, as I said, they offer liquidity. Like if you want access to your money, some money market funds will give you that. They offer stability and better returns than a regular bank account, or than you placing your money in a savings account or under the mattress, or those funny ways you've placed your money. Okay. Another avenue you can use is government securities. So this is to say things like treasury bonds and bills are secure. Okay. There are also tax efficient options for medium to long-term goals. If you have a long-term goal, this is what I would advise for you to go for. Okay. Government securities. And the beauty about this is interest earned from these bonds and bills, they are tax-free. You hear those investments the wealthy make or they do, and they are not paying tax. These are the ones. So think about it. Not think about it. Start. Okay. If you want to build wealth and you have an average income, start. Another avenue is land and real estate. This is a tangible asset because it can offer high returns, because these are things that appreciate over time. Okay. For example, rental income. They keep appreciating after some time. You might build an apartment somewhere or invest in land or apartment, and then there's a road passing by, the price increases. But this one is a bit sensitive because some things are very crucial. For example, if you're buying land, you have to verify the title deed. And in Kenya right now, hey, you have to be very careful or people will just con you. You'll be conned. Okay? People will even give you fake title deeds. Huh? So you need to do your due diligence. And of course, it will cost you money. Huh? But you have to do it. Hire a conveyancing advocate and do your due diligence to avoid fraud. Okay? Personally, I would not go for this. I've tried investing in real estate. I've seen, it has its pros and cons. Right now, according to me, the cons outweigh the pros. So right now, maybe in future, but right now I would not go for real estate or land. I will go for government securities and things like MMFs. But you do you. You know what's best for you. That's why sometimes it's nice to sit with yourself and figure out what works best for you. Okay? You balance the pros and the cons. See which one outweighs the other. So. Another avenue you can invest in is the stock market. These are good especially for long-term strategies, long-term plans. You can consider doing this through the Nairobi Stock Exchange, that's the NSE, for potentially lucrative through higher risk returns. Think about it. Okay. Lastly, diversify. I have a piece of art about diversification, the importance of diversification and things you need to diversify on. You can get it in the link below. So, diversify. Balance your portfolio between liquid assets, things like MMFs for emergencies, and illiquid assets like land for long-term growth to manage risk. And lastly, number 4, take advantage of the Kenyan context. What do I mean by this? I mean, leverage emerging town growths. Like the way we used to hear, oh, Kitengela is growing, and people rushed over there to buy land, plots of land, to put up businesses, and now Kitengela is a very huge town. Athi River came up like that, you see, Syokimau like that, yeah? Those satellite towns like Ruiru, Juja, and this is because these places, they offer more affordable pieces of land, and they come with very strong growth potential or appreciation potential because land appreciates over time. Yeah. As I said, infrastructure improves. If there's a highway that passes by or railway line or there's a hospital or police station, or a big school is built over there or a technical institute, these things tend to make a piece of land appreciate in value. Okay. Another thing you can do is explore things like chamas and investment groups. The importance of joining a chama, mostly because I've ever been one, is you are able to pool resources for large investments like buying land, starting a business, things like that. But there's dangers that come with chamas. As I say, I've been one. I was a treasurer. And there's people who would get the money, but then when it comes to other people getting their money, they have a problem giving or refunding the money. So join a chama, but you have to ensure, yet again, do your due diligence. Ensure that chama is well structured, or else kitakuramba. You'll lose money. Finally, as much as I tell you to do all that, as much as you do all that, or you do half of it, or a quarter, whatever it is that you do, you need to protect your wealth. Okay? No matter how small, no matter how big. So some people get insurance, both medical and asset, because you, as an individual, your wealth. If you're healthy, then it means you have more wealth. If you're sick, so you can get insurance. Okay? And at the same time, be informed about the KRA rules, things like the E-Teams requirements. so that you're able to avoid things like penalties and that you're able to protect your margins. Because at the same time, you cannot be building wealth and your margins keep going somewhere else, like being deducted, or you're paying for penalties. It means you're doing nothing. And we don't want that. Considering you have an average income, you cannot afford to be paying for things like penalties. And penalty fees can be very expensive. Okay? Because sometimes things can go beyond your control and you even have to go to court, you have to pay for a lawyer and stuff like that. And remember, time is money. And you know the Kenyan government, especially the law, whatever, the courts, these things don't get solved so quickly. It takes a lot of time. So yes, those are the 4 ways that I can tell you if you have an average income, you can use to build wealth. So let nobody out there intimidate you or make you feel weird or make you feel like you can't make it. Everyone out here can build wealth. You just have to be strategic about it. You have to be smart about it. And you have to be willing to do what you're supposed to do. Okay? And when the opportunity arises, you have to take that opportunity, because when it passes, it never comes back. Yeah. And of course, having an average income, it might not be enough. But life is always about sacrifices. If you don't sacrifice this, you'll sacrifice that. Sometimes I feel it's best if whatever is being sacrificed, I decide what is being sacrificed. Yeah. Because if you have an average income and you don't invest, you don't start building wealth. You live hand to mouth forever. And if this income, for example, maybe you're employed, if ever you're fired, then it means you're back to zero, because you used to live from paycheck to paycheck. You see, you did yourself injustice. You'll have no one else to blame other than yourself. So these are the things we are trying to avoid. Okay? So stop walking out there thinking, because I have a small income, average, it's not enough to do this and this and that. No, if you can have some money to go out every weekend, it means you can afford some money to put aside. Okay? If you can afford a brand new shoe every month or every 3 months, then it means you have money that you can set aside for an investment. Okay? There's people out there who don't invest, they just save. They have money in their accounts. Some are too naive to see how inflation affects their money. Now, if you have that kind of a problem, even me on a personal level, I don't know how to help you. Because you have to learn about these things. You have to be hungry for knowledge, to want to know what is this thing called inflation? How is it affecting my money? And that's how I say, what you learned about money, what are you willing to unlearn? How open-minded are you? That's why we talk even about changing your mindset. Are you willing to embrace new ways? Are you willing to embrace change so that you can grow? Because that's the only way you can grow. Change is the only thing that is constant. Yeah. So, if you grew up knowing saving is the only way, either change the way you think or just embrace the fact that you'll be stagnant for a very long time. Okay? Yeah. For you to grow financially, for you to build wealth, there's steps you must take. Whether you're an average earner or even if you earn well. There's people also who actually have, potentially, they're making good money. But still, they're using all their money on doing the wrong things. That's even worse. And those are the people who can't even come back mentally. If something happens to them, the comeback is it takes a huge toll on them mentally, psychologically, because they didn't do what they were supposed to. They didn't invest. Okay? There's people who live life like there's no tomorrow. Yes, I know no one is promised tomorrow, but it's better to be safe than sorry. You live like there's no tomorrow, and then you're the individual God decides you'll live till you're 100, and then you squander everything. You end up being old and you're a pauper. You become a beggar. But you had the opportunity. When you were young, you lived life large. You drove the best cars. You lived in the best estates. You were, every new club, new hotel. You are the one who was even referring people, You didn't mind paying for people's bills. You were the leader when it came to living the fast life. So you don't invest. You don't put money aside. You don't look at your older you. You don't feel sorry when you picture who you'll become at an older age. Don't do that. So apparently this is not advice for just people with an average income. It's for everyone anyway. Because you can have a big income and still make stupid financial decisions. And it can still backfire on your face. We've seen it happen. Okay? You can get a very good, well-paying job. If you don't invest what you get, if you think the extra income is just extra income because you deserve it, you feel like you need all the best things in life, and you don't protect your future, you will never build wealth. You live like the wealthy for some time, but then that bubble will burst. And when reality hits you, you will cry on your own. Anyway, I was just telling you how you can be able to build wealth on an average income or when you have a small income. I hope this helps someone. I really do. Yeah. If there's any other way that I've not mentioned, please let me know in the comment section. I'd love to read from you. Share with us. Okay? Let's not keep things to ourselves. Yeah. Even if one person learns or one person uses my advice and makes better decisions, that's all that matters. Okay? Well, that's it for us today. I'm Miss Muithathi, and I'll see you in my next video. Cheers.